Got it. Yep.
Okay, sounds good. Hey, well, first of all, welcome everybody. Really, really excited for today. Super excited that Mike Tushman can join. Mike and I met when he did a case study on Havas and on victors and spoils, and got to know him. And one of the things I love about Mike is I learned more from like working with Mike, him interviewing me about my own business than I think I did by operating the business. So Mike, you're always so insightful and so much great experience. So it's a real honor today for two reasons. One is Mike's going to teach the Deloitte Pixel case study. But I think the most exciting thing about today is that Balaji is going to be on the spot. So it's going to be really, really fun to see how Balaji reacts. So it's going to be awesome. So the way we're going to do today a little bit differently is that we're going to go to breakout rooms pretty quickly, one-on-one. Brian Pena, thanks so much for our conversation yesterday. Man, it was so awesome to connect with you. Really appreciate it. It made me think about, today's little breakout, and Mike, and Kerry, just for explanation, the way we do the breakouts is we break out, it's one-on-one, and a couple of things I was reflecting on, kind of, Brian, from our conversation yesterday was like, just let's express to each other like what we're grateful for, and then maybe one thing that we do that nobody knows about that kind of we get stoked about. So anyway, let's, Brandon, can you take us to breakout rooms, or Catherine?
Yep, here we go.
Never enough time.
I know, never enough time, right? I love this part of the group. Oh, it's so awesome. Mike, were you able to connect with somebody?
Balaji and Sanjeev.
Oh, perfect. What a great group.
That is a strange.
It didn't feel too random.
That was
Mike, I apologize that you've never met Balaji before. I hope it was a good introductory meeting.
Right.
Wow.
Awesome. Well, here we go. Let's do this. We've got a bunch of folks on the call. Hey, so like I said, I had the honor over the last year and a half to work with Mike Tushman and Kerry Herman on writing this case study, and it just was such a learning process for me. And it was especially really great because working with Balaji is always just a real joy. Just his stoke about life and his stoke about things, the way that things work, and also just his transparency and honesty. So anyway, Mike, take it away. It's all you.
Whoops. Great. I'm going to share my screen, everybody. I'm just going to try to share my screen. I'm going to do I'm going to try to share several screens with you. So yeah, it is great to be working with the Open Assembly. I want to thank John for getting this together. This is the first time I'm teaching the case to a public audience. And I want to thank Kerry. I think Kerry is here, my partner in crime. And of course, Balaji for helping make this happen. Everybody, my research is on incumbent organizations in dealing with technical change. Oh, and I see NASA here, Jeff Davis and his colleagues from NASA. How great is that? I have learned one of the secret sauces of HBS is we learn in doing these cases. And the very first case on openness was done at NASA, courtesy of Jeff Davis. So Jeff, thank you. And in fact, Hila, one of my students, is now doing an amazing research on this space. So Jeff, thank you. So anyways, my work is on how incumbents deal with technical change in general, now dealing with the openness and crowd and web issues. And this case was written to be a contrast between the way things typically work with large private incumbent firms. I want to keep separate NASA for a second. But my course is all about, how come Sibagagi, how come is dead? How come Sears is dead? How come Polaroid is dead? And what about Nokia? And the end of the story for incumbent organizations is mostly pretty catastrophic. In the face of technical change or environmental shocks, witness COVID. So this work on COVID, the reality of COVID is to me the same as a technological discontinuity, but let's sort of hold that off for later. And this case was written to further our understanding of how incumbent firms, in this case it happens to be Deloitte, deals with environmental/technical change in a way that will contrast with the Havas case. Those of you who know John know that he was a principal at Havas. He was acquired by Havas, and it's a pretty ugly story. The NASA story is a sweet story that ends really well, and you see the evolution of openness at NASA. The Havas case is pure pathology. I'm sorry, did I hope I hope he said Havas was pure pathology. And I wanted a case in a professional service organization that would contrast to that. So I want to sort of set up this case when I teach it publicly in AMP coming up on what do we know about this. And one of the basic ideas I want to get on the table as we work the Pixel case is how to help incumbent organizations. In this case, it's going to be Deloitte Consulting. Do consulting in the old-fashioned way and doing it in perhaps the new-fashioned way, sort of as using the crowd and open talent as a way to do high-end consulting. This basic idea of explore and exploit, to play in different spaces in this innovation stream, is a basic idea from Jim March, and this Deloitte case is a piece of that story. I'm anxious to get to the case itself because we don't have a whole lot of time. Can I just ask the group, let me just see a show of hands. I know there was some difficulties in getting the case. Can I just see a show of hands of who was able to read the case? Because I'll have to pivot based on that. I want to see hands. Who has been able to? I mean, hands on, you know, not hands on the. I'm seeing people raising their hand, but hands on Zoom. Can you raise your hands on Zoom? So Laura, you've not been able to read the case. Christine Moon. I only see Todd and Sanjeev. So I'm not sure how many.
There's a little reactions button at the bottom where you can click on,
Oh,
and then
any group should know this. Yeah, there's a reaction thing.
do a thumbs up there.
Got it.
It does fade away after a couple seconds.
All right, I'm going to try to work the case, although I'm not sure how many of you have had a chance to read it. But let's do the following, everybody. I want to start this case in 2014. And those of you who had a chance to read the case, this is a case at several different levels of analysis. It's at the corporate level of analysis, and it's at the business unit level of analysis. I want to see if I can, I want to, hold on everybody, I want to get my, at the corporate level, it's with, it starts with, I'm trying to get my PowerPoint up here, hold on, there we go. At the corporate level, it starts with Janet Foudy. This is Deloitte USA, gigantic organization. Those of you who had the old version of the case, it's not an $18 million firm, it's an $18 billion firm. Jim Moffitt and Janet Foudy at the corporate level are playing games here. And they're playing games in this innovation space, what Charles O'Reilly, Andy Binns and I call ideation and incubation. And they're doing it at the corporate level. They have a CIO, Vaz, and this fellow Henry, and Pixel is one of 40 experiments inside Deloitte USA. I'd like to start the group with, and then by the way, further down the organization, eventually Balaji starts, as you saw, at the corporate level in the CIO's office. And then at the end of the case in 2018, he's moved protected by corporate into his own business unit. And we'll get to that soon. But can I just start with the group's thoughts on why is Janet Foudy spending so much time on exploration at Deloitte? This is a pretty high-end consulting firm. And what are they doing around this exploration? And some sense of the exploration process, because Balaji and Pixel is one of maybe 60 projects inside Deloitte. And I want to start with, how come so much experimentation? Anybody want to get us going on that?
A compelling event, perhaps?
Who's talking?
This is Sajeev here. As I said, perhaps a compelling event.
What was the compelling event, Sanjeev?
Could be a competitor taking away business.
No, not it could be. I want to know why this at the most senior level of Deloitte, and this is Deloitte Consulting, so this is pretty high-end stuff. Why they're doing so much experimentation? It almost looks like wild and crazy experimentation. So there's no compelling event here, Sanjeev.
So maybe they're hedging their future business model.
Can I just get? I'm not sure who's talking. Can I get hands here? Can I?
Yeah, it's San Rahi.
Yeah.
Waving at
Okay.
you. Hi, Michael.
Say more, please.
I'm suggesting that they were hedging their future business model.
Yeah,
Business was good, but they're looking at future threats.
Yep.
And mitigations.
Yep. And say more, Mary Molino. Say more. So we have one comment around hedging the business model and experimentation as a hedge. Mary or Brian, I'm just going to start calling on people.
Yeah, so maybe it's a possible of looking at utilization ratios to increase overall market cap and profitability.
Wait, say that again. Is that
Well,
is that
one of the challenges? Yeah, this is Brian. One of the challenges with consulting firms is they want to make sure that they have the highest utilization rate of their on the bench talent as they can. So experimenting in ways to improve their utilization ratio, leveraging alternative talent modes.
Yeah, well, the alternative talent, that's sort of Balaji, but why AI, why blockchain? I think there's a wild experimentation here. So this is not just on utilization ratios, which is partly the Pixel thing, but this is like all kinds of crazy experimentation.
Is it to do with scarcity of resources and looking to go to a more non-linear model, which doesn't need more people every time there's more work?
Yeah, that is certainly the case with Pixel, but I'm trying to get beyond. I'm trying to start above Pixel, and notice that it starts at the corporate level with an awful lot of experimentation, and I want to sort of push a little bit on why they're doing so much experimentation.
Is it because of the rate
Stephanie
of
Fells, I
change?
see your hand.
Well,
up.
I mean, it's probably an indication of how.
Hold on, everybody. I'm trying to go by people raising their hand. Stephanie Fells.
Oh, I had raised it earlier for the question if we had read the case, but still I can answer this one. What comes to mind is acquiring as much knowledge as possible internally on new technologies just by leveraging open talent for projects that are given to them by clients.
Yeah. And why would they want to do that? Why would they want to do that, Stephanie?
Most of the investment in the future is going to be around these technologies as they forecast innovation coming from clients themselves.
Yep, super. So they're doing a bunch of experimentation around knowledge acquisition. They're hedging their business model, which is heavily on talent, and they want to sort of learn about the outside world, and they're learning in a fundamentally different way. They also have this process at the corporate level. Did anyone, how does it work inside the businesses? Did anyone want to speak to that before we get to Balaji?
Yeah, Michael, it's Alistair here. I think that there's no point in charging $ per hour anymore. You can use robots and AI. So I think that technology will replace consultants, and there's an important thing to pay attention to in consulting businesses. I've spent quite a long time in that space, and I don't think that you should charge dollar or euro or whatever the price is per hour. There's no need for consultants. And I've learned and watched robots do this. So just an opinion.
Well, you've watched robots do consulting?
Why would you pay dollar per hour when you can hire robots?
And you've actually seen robots do consulting?
No, not advice, but routine activities. There's no point in
But the point of this case is, can we use the crowd, the openness and talent, not to do routine stuff, not to do robotics, but high-end consulting?
I think that's tough.
I'm having trouble with the robots doing consulting part.
Yeah, I think that's tough. That's not what I'm saying. I think that the basics, so anything that you've got with a manager, director, partner in like Deloitte or PwC or KPMG, I think it's possible to do that work with humans only. All the rest of the stuff below that level is going to be delegated to robots and AI.
Yeah. Okay. Does anyone want to weigh in on the robots, AI, and consulting thing?
Michael, this is David Swift, if I may. Having bought consulting for a long time, the old advisory model is dying on the vine, and the big four have recognized that. And the demand or the pull from the market is not for people and the old advisory model. Most of the new projects are technology driven, and the big four don't or didn't have the requisite skill sets with enough people with this knowledge. So they've had to go out and dig into this alternative marketplace to try and find it, because they don't have them themselves. And a lot of these people don't want to be consultants.
Yeah, totally.
Work in that environment. So that's one of the key drivers that I see in this space.
Super. And what we see here, I'm going to go right now to Pixel, is we see at the most senior level of Deloitte, massive amount of almost random variation. It's just experimenting all over the place. One place happens to be with Pixel, because they're hedging their bets, because they don't know the future. They're trying to create the future through their own experimentation. And now we're in a world where, oh, and by the way, they have a whole disciplined approach to it. They get this notion of graduation. They got this notion of spinning it back into the organization. So they have a really disciplined approach to doing this experimentation. I think we should leave that. And we're now in a world where Balaji, who has been protected, he's been up here in corporate land protected. And Janet Foudy says, that's it, Balaji. You're going to have to earn your own living inside Peter Gregorio's organization, and you're now suddenly a P&L. Everybody, if this is so great, if this old model is dying, I want to know why Balaji is having such a hard time. He has 1/3 of the professionals, 1/3 of the partners excited, but 2/3 don't give a damn. And if it's better, faster, cheaper, I kind of want to know what the big issues are facing Balaji, and we'll get to what he should do about it. So anyone want to get us going on, if this is so great and the old model is dying, why is he having such a great problem? And by the way, everybody, it may be Balaji. It may be just Balaji is some like loser entrepreneur. So
that's brutal.
Let's have that in the background. But how come Balaji is having such trouble getting traction? Kashif Razi, do you want to get us going?
Sure, Michael. So look, I think the fundamental issue would be probably around trust. How much people trust a new delivery model, okay? You need to keep in mind that a lot of these people would be facing customers at the end of the day, okay?
Yes.
So putting themselves in those shoes and having those difficult conversations when things don't go well, especially with something that is so niche and new, you know, building that trust is the first fundamental cornerstone.
Yes, and trust where? Trust inside Deloitte or trust with the clients or both?
Trust on the entire delivery model that this thing can come through.
Mm-hmm. So there's a trust in Pixel in the whole delivery model. Other perspectives on why this seems to be so problematic. Hey, Jeff Davis, I see your hand, please.
Sure, it's similar to some of the things we experienced, which was internal resistance due to threats to both their professional identity and also acquiring the talent. They spent a lot of time acquiring the internal talent, and the open talent part was also viewed potentially as a threat.
Hey, Jeff, what's so threatening about open talent, freelance, contingent labor? What's the threat here?
The threat is that you can acquire people quickly with a distinct expertise and move very quickly, whereas internally you've spent a lot of time hiring people and building up their portfolios, and so it's a different model that appears to threaten the internal consulting.
But I just want to push a little bit. What's so threatening when the 2/3 of the partners see Balaji? And by the way, this is the same thing with John Winsor. He represented open creativity in an advertising agency, and people found him unbelievably threatening. Even with his wacky hats, he was seen as really threatening. I guess I want to know from people, what is so threatening about a methodology that is, for all intents and purposes, better, faster, and cheaper? Ty,
it's new, and we are hardwired to have an aversion to things that are new. It goes back to being a hunter-gatherer. If you are the first hunter-gatherer to bring a berry that no one has tried back to the group, and that berry turns out to be poisonous, your reputation is damaged in the group. Once you've found a berry that will support the population, the message is stick with this kind of berry. And getting them to try new berries is incredibly difficult.
But again, they've tried the berry. You have several actors in the case who have tried the berry and absolutely love it. You know, in the consulting part of the business, Richard Walker in banking loves the berry. I guess I want to know why the Richard Walkers and the Balajis have not been able to sort of push it.
So
they've not been very successful at getting what I'm going to call a social movement inside the consulting business.
Yeah, groups resist change, and there are early adopters to whatever is next, and if they prove to be more successful, they will run the others ultimately into the ground. Like the people who adopt something that works better win over time, but that's just a process, right?
Well,
you almost will never see an entire organization adopt an entirely new way of doing business overnight, right? That just doesn't happen.
Yeah. Oh, so you think that Balaji is doing well? Is that right? You think?
I do think Balaji is doing well. I think Balaji probably is doing better than he thinks he is.
Oh, you think Balaji is doing better than he thinks he is?
Feels, I guess, is what I would say.
Oh, Adam Sinlin, is that you there? Are you part of you're in the case? Is that the Adam Sinlin in the case?
Indeed, it is.
Oh my God! Wow. Well, how come you left? You bolted.
I did. I went to Top Coder for a variety of reasons, but Dan, I think there are multiple answers to the question that you posed. One of the big ones is that Deloitte is a collection of a bunch of different people, a bunch of owners, a bunch of managers, and they all have different incentives. Some of those were aligned to what Balaji and I were trying to do. some were not. And so, finding the needle in the haystack was one of the really hard things that we had to deal with, even when we were successful.
But Adam, what do you mean by incentives? In what way, I mean, I thought, again, this was better, faster, and cheaper. And Richard Walker said, hey, I'm not going to go to any client. This is so good. And it's so profitable for his bottom line. Mm-hmm. So I help us understand the incentive, why you wouldn't have more, because this berry is a pretty sweet berry, to use the analogy of that last fellow. Yeah. What's the incentive angle here?
From an incentives perspective, so Richard, I mean, fantastic guy. His incentives as a senior Deloitte partner, leading a really big account, was to support that account more through additional Deloitte services or products. So Pixel was exactly, bringing Pixel into his customers was exactly what he's incentivized to do. But he doesn't run projects. There are other delivery partners that run projects, and then senior managers on down, and they're incentivized differently. Right? They're incentivized to deliver as best they can, as quickly as they can, at the lowest cost that they can.
But Adam, I want to push you a little bit, but that's precisely what Pixel was delivering. Better, faster, cheaper. So this, from an incentive angle, I guess I don't get why the incentives are misaligned here.
So I think there's one other one.
Hold on one second, Mark Platosh. Hold on one second, Mark. Adam, please finish that thought.
Sure. I think there's probably one other thing there that I neglected, which is at the lowest risk, right? And so, and the other piece that's tied to it is the further up in leadership you go, I think at any company, the more time you have to spend. I mean, it is actually your job to think about how you're going to future-proof the company. Right. And so the leaders that we worked with, they got it. They saw the value. Right. The lower we got, they didn't always see the problem. Right. They're not necessarily supposed to be thinking 10 years out. They're supposed to be thinking about delivering this engagement really well. Right. And so if there's not a problem in delivering that engagement today, then it's hard to get mind share sometimes.
Yeah, well, this is an important point. Right now, the firm is doing really well. And why would we want to do this potentially risky work, and particularly in talent acquisition, because that's what Deloitte promises. Deloitte promises is super talent, and we're just not sure. Great. Mark Platosh.
Yes, and mostly I agree with what the last speaker said. I think that there's a political issue where your principles in the business, are kind of the, for lack of a better term, the show point is there's a perception of their value and their billing rates. At Maven, we go head to head with disrupting consulting spend. And when we do bake-offs, we'll come in at 20 times less billing for effectively the same results. Mm-hmm. That's a huge challenge to the top line of any traditional consulting firm. There's just, you're cutting so much fat out of the business by taking this route that suddenly you're not able to command nearly the rates you were commanding before. Beyond that, I think the threat of something like Pixel or a company like Maven is that we are targeting not just the traditional segments of large consulting firms, but we're actually unlocking capabilities that are only possible through technology. So we deal with in many cases, very, very long tail, very hard to find, hard to answer questions that there's no consulting firm or individual out there that'll ever touch that work. Large companies focus on the common questions that every business has, HR, IT, all of this. But when you're dealing, the long tail, it's infinitely long and infinitely wide. So that's actually a different business model entirely.
Wait, so you don't think that what Pixel's offering is in the sweet spot of Deloitte?
I think it disrupts Deloitte, but it also, in many ways, offers new capabilities that weren't there before.
Yeah. So it possibly disrupts Deloitte in this sort of business model and rates that Mark is talking about. And partly Deloitte has is not feeling the pressure of what I have called a performance gap. And this berry is seen as pretty risky. Any other thoughts as to why Balaji is having such troubles getting traction before we go to what he might do, what Matt David and Pete and Balaji, because the case ends with what to do next in the context of all this resistance. Jason Harmelon, I don't think we've heard from you yet.
Yeah, I think one of the things that a consulting firm brings is discretion and the ability to kind of guarantee that discretion with their employees. And that seems to be, this model doesn't have as strong of an answer for that.
Wait, what do you mean by discretion?
When you have full-time consultants working for your firm, everyone's incented to follow the rules per se in terms of like what they share with outside parties. So with a consulting firm, you're getting a strategic solution, but you're also getting some sort of an assurance that your information isn't going to be shared. And that's a more complicated challenge when it comes to this decentralized model.
Yeah. Yeah, this decentralized model may open the firm up to issues of proprietary knowledge being leaked.
Yes. Yeah.
Oh, that's a whole other angle, everybody. That has just come to the fore is that this highly decentralized model is not as, again, maybe it's safe. Maybe it's the same problem of threat and safety to the reputation of Deloitte, and Deloitte sort of trades on reputation.
Hey, Michael.
Todd, let me hear from you. Last point, Todd.
My thoughts are that he's potentially ruining everything for Deloitte's business model. He's totally on the exploration side, and everything he represents is a threat to everything that they've done previously. And if he's successful, everything changes. So that's the threat.
Yeah, so that was related to the one of the last gentleman's point on rates and the business model being so fundamentally different. And if that is true, then Balaji has, so I'm hearing from the group, if I just take the set of comments together, between the berry is dangerous, the berry is a threat, the impact on rates and business model, and the possible loss of controlling the expertise, controlling confidentiality. It sounds pretty daunting if you are in, maybe this is an experiment that should be shut down. And that's, let's go to the end of this case already. And I'll take 5 more minutes on this. We should get to Balaji. But the case ends with Matt and Pete having to decide, do we shut this thing down? Do we spin it off as a separate P&L? Do we do nothing? Do we keep this sort of bottom-up approach to this social movement approach? Or do we do a heavy top-down approach to making this new business model much more important to the firm? And I want to do this case not from Balaji's perspective, because we know Balaji's perspective. I want to do this, I want to make this choice if you're Matt David. Is this strategic for the firm? And 2, if it is, what are you going to do about it? And then we'll go to Balaji. Janice Stevendor-Dale, do you have a point of view on that? Can't hear you, Janice.
Would you repeat again, please?
I guess I want to know what to do. If you're Matt David, and you're hearing all this sort of great stuff from Balaji, that this is better, faster, cheaper, this is a hedge on the future of consulting, consulting is changing.
Yeah.
He wants to move aggressively, but we've got the voices from this open assembly community saying this is awfully risky, completely different business model. And if you're Matt David, what's what's the recommendation?
Well, I think you have to evaluate funding and potential, right, of the two opportunities. One opportunity is to spin off and start on your own, and the other one is to route through the education and the reorganization that it would take at Deloitte to make and basically restructure and rename, rebrand, new business model entirely for the organization formerly called Deloitte.
Well, you have Matt's data. You have all the data that Kerry and I and John could put in the case that goes to Matt, and he's got to make a decision here. So he has the data that you have essentially. And I guess I want to, as you finish the case, did you have a point of view on what to do?
Well, I'm not sure I got the right case. I thought we were talking about the future work trends for 2020. So I'm not sure I've read the case.
Got it.
But in my view, in my experience as a professional, it's likely that it's going to be less expensive to start on their own than it is to try and route through coming from the bottom up to convince Deloitte.
So Janice, you want to spin this thing off, do it separate rather than going through the Deloitte organization.
Yeah, it's faster. It's faster and it gets you to profit sooner.
Yeah, spin this thing off. Other points of view on this? Alina, Juliet, do you have a point of view on this?
I'm happy to jump in if no one else is ready to go.
Okay, I'm not sure who's talking. Help me, please.
This is Mary Molino.
Hey, Mary. Yeah, go for it.
So this has been my world at both GE Digital and EY, so very close to my heart. A couple things. I think this is a challenge because we are trying to execute a new business model within a existing operating model, and it fundamentally doesn't work. So at scale, until you can redesign your operating model and get everybody on the bus, your business model, your new business model is not going to work at scale. Secondly, I think that oftentimes in these large organizations, there's so much pressure to deliver results. We oftentimes try to do the peanut butter spread approach and opportunistically try to get traction across all of our accounts and all of our use cases. And so I think a big opportunity here in taking the page from the best-selling book, Crossing the Chasm, is we've got to hone in on the early adopter and innovator use cases, prove those out so you have a strong reference base, and then you've got to look at who your early majority potential adopters could be and be really market focused on those.
But Mary, let me just push you a little bit, particularly in your work at GE Digital. Do you want to? You see the completely different business models between the consulting, traditional consulting business, and what Balaji is offering, and the tension between the two, and this Barry, I'm not sure how good this Barry is. Are you agreeing with that prior person who said spin it off?
No, actually I'm not. I kind of saying a hybrid of the two. It's a non-negotiable because I don't know if you heard me mention I was at EY as well. It's a non-negotiable for any consulting company to have these capabilities unless their alternative strategy, not spinning off, but they want to have a separate group working on the edge and they're investing VC funds and they can eventually acquire that business. So I think it's got to be part of the core. I'm advocating more for a more targeted and precise approach for getting traction, focused on use cases and specific target segments within the population faster, to get traction faster. Because to John's point, the challenge you have in these big consulting firms is the partners played by a certain set of rules, and that's what got them to be partners. And to say that they have to shift, right, in parallel with they're responsible for bringing in a certain number of certain number of projects, dollars every quarter. It just doesn't work. Moreover, traditional.
But again, I'm not sure what you're suggesting. What Matt is going to do with Balaji here? Are you saying to focus on certain customer segments or industries?
Yes.
Sort of be more. Help us with Matt is going to do what with Balaji? He's got Pixel supposedly growing.
Can I jump in here, Michael, for a second?
I'm not sure who's talking, but please go for it.
This is Kashav here, Michael again. So look, from a consulting point of view, I think, look, as Mary was saying, this needs to be embedded in part of the entire culture. If you think about it, from top down, what needs to happen is that everybody needs to be given some sort of pixel utilization targets. Okay, if you need to start utilizing this function by certain amounts. Balaji needs to make sure that he has identified the absolute sweet spots for the service, okay, where he's going to hit the ball out of the park every time. What we need to make sure is that any consulting head from that line of business, whether that is F&S, whether that is any sort of IT management, it needs to come through down to Balaji and say, look, Balaji, we need to hire few more resources for these projects. Do you think Pixel can actually help? Once you have that process embedded within the culture, it would be a slow transition.
Great.
You need to identify levels.
Super, I got it. So this is a heavy top-down approach.
Yeah.
This is Pixel is strategic for the firm, and that from the most senior levels down, this is going to happen, and it's going to happen fast.
It would, but you start slowly. So you give them slow utilization targets, make sure that they get comfortable, on a yearly basis before you raise the bar higher and higher.
Yeah. So this is this is sort of like the India project that they did earlier in the cases. They legislated it from the top, and it gradually got traction inside Deloitte.
Yep.
Okay, so it's 12:48. Balaji, come on in and help us understand sort of what you did, what you faced, react to these comments, and importantly, before 1 o'clock, what you did.
It feels like I'm reliving some trauma for the last 3 years, and I know Adam was with me for the majority of this time pre-2018. I mean, I at least want to make a couple of comments, and one of it is, why did I struggle more? Why did the company struggle most with adoption? Again, as every entrepreneur has a different vantage point and a perspective on that. I think my biggest reason I think we struggled the most is, I think Adam touched on this as well, is there was no case for change. We were not a Polaroid or a Kodak type of situation where our sales were declining. We were doing probably the best that we ever were. And you have the juxtaposition where when you're doing really, really well is actually when the company has more money to invest in innovation, right? So there was a lot more desire to go after new businesses because there was enough margin, enough investment being created. At the same time, so that's the top senior management view, that this is the time to go after new businesses because we have some money to invest. At the bottom level, they're like, what is the reason for change? I'm not seeing the competitive push, or I'm not seeing the competitive push to say, I need to change what I'm doing and take on the risk and put in the effort to make that change happen. So it is the typical approach that the companies like ours always underestimate the long-term threats, which is AI, all the investments that we're making, but at the same time, overestimate the near-term threats, which is your next competitor. What is Accenture doing? What is EY doing? What is McKinsey doing? And as such, get locked themselves into lockstep growth, because all of the growth comes from looking at each other. And unfortunately for us, there was no other consulting firm that was making a similar investment so that we can say, so look at them, they're making this investment, we need to make more, or I need to change faster to keep pace. But I think what we have done, and I at least anecdotally have heard EY and KPMG and a few others looked at us and said, okay, now we need to go after this opportunity because Deloitte is going after it. As a first company in our space to go after it, we did not have the benefit of competitive pressure to change that. And I think coming from the company perspective, it is standard personalities in companies, and Ty mentioned it, and a couple of other people also mentioned it. The people, there are always people in the company that want to try new things because it is in them, it is they're personally comfortable with it. It doesn't, in many cases, it's got nothing to do with where the company is. The company could be dying and they'll still experiment, and the company could be doing a great job, they'll still experiment. But the problem is, how do you use those experimenters and convert the learnings to say it is easy for everybody else to do? And that is the long-term wrestling that we're continuing to, that most businesses in the company just have to take on. Unless the competitive pressure, which for us, if the freelance marketplaces or the crowdsourcing companies or the mavens of the core were making hundreds of millions of dollars or billions of dollars, I could have pointed that to say, look at those companies, they are truly becoming material and competitive to us, and they are eating our core business. Unfortunately, that didn't happen either.
So Balaji, you think that if there was a crisis at consulting, that you would have been picked up, that the resistance you faced would have been substantially less?
No, ideally, yes. But let's take COVID, right?
Yeah.
That's a crisis, right?
Yeah.
And everybody's going through layoffs, which means that the proposition of hiring more people is lower. So the proposition of using open talent should be higher, right? But unfortunately, when you're in a crisis situation, you're conserving cash. You're not experimenting that much, and you're doubling down on your internal resources, and you're not investing on external resources. So in either case, the organization figures out a way to push against innovation.
Yeah. Yeah, and I guess I've been, Balaji and I have gone around this a bunch. First of all, obviously, that this issue, there was no case for change. There was no burning platform. This is one of the rare examples. And the reason I want to do the case with Kerry and John is this is a proactive revolution. By the way, John, much like Havas was a proactive revolution. Here it's being handled in a much more savvy way by the senior levels and down and with Balaji. But I guess I want to push Balaji that because what I'm hearing from you, and I've heard it now several times, that if the firm was feeling performance pressure, the resistance to openness and this new business model would have been less. And I guess I just don't believe that. I think this is such a fundamental threat. This buried, I love that analogy the person raised earlier. This berry is so different that even under threat conditions, it might have been resisted. It's sort of like Jeff at NASA. This was like unbelievably great. This was a better way of doing research. And yet the first reaction was resistance, massive resistance rooted in identity, what we allude to in the case as an identity threat. And I guess, Balaji, my sense is that you think that is less important than competitors weren't doing it. We weren't feeling a performance crisis. And now with COVID, we don't have the cash. So any thoughts on that?
Yeah, and I think, every company has a different type of DNA, and somebody said it in the comments as well. Big Four tend to be a lot more risk averse, not because we are actually not true consulting companies like an Accenture or a McKinsey. We also have a legacy tax business, an audit business, which make us as the highest level, the cultures of the firm a lot more risk averse, a lot more careful with reputation. Failure has the brand reputation has a larger repercussion because we also have an audit firm, which we audit 30% of all the large companies in the world. So in either case, whether we are successful or whether we are struggling, the perception of holding on to what's working, we just go back to that notion constantly. And I think there are other companies with a different DNA that react differently, would have react differently to the similar situation.
Yeah. I'm going to ask John to sort of summarize. I want to have one comment and then go back to John to sort of wrap this up. Here's my point of view, Balaji, on that. I think that your articulation of holding on to the past, there's no burning platform, therefore resistance to change is right, but in 2020, not right enough.
Sure.
That the pure emotional identity threat that you represent, it may well be that consulting is going to be fundamentally different. So it's not just resistance to change, the old-fashioned resistance to change. This is resistance to change in the context of consulting may be completely different. I don't think it's going to be robots, that first person's point on robots, but it's not going to be the same old, you hire people from Wharton and Columbia and they come and you sort of train them and talent them up so they can be trusted with clients. This is a totally different way of using freelance talent to do the job in a way that is better, faster, cheaper. So I think that professional identity, what is consulting, is critical. And at the end of the day, I think that this will, if it gets implemented, will shift Deloitte's culture in a massive fashion. And that will be partly rooted in what is Deloitte, who are we and what we do. That was a Havas issue, John. That was a NASA issue with Jeff Davis. I just think that you represented such a deep threat that they pushed your way. And who knows what's going to happen now that you have this strategic relationship with Expertfee that you didn't get to. But they made a big, bold move into Expertfee, and we'll see what happens. John, do you want to wrap it up? We don't have much more time.
Yeah, that's great. No, I think, first of all, it's unfortunately we get to kind of what you did, and I think the Expertfee part of the story is a really, really important thing. But Mike and Kerry and I are working on a B case study that with Balaji, and I think there'll be a lot of great learnings there as well. I find this super fascinating after learning such hard lessons at Havas, and I think first of all, I think that it takes an alchemy of right personalities, right? And I don't think I was the right person to do what I led at Havas for a number of reasons. One was that it was a French company and I don't speak French and I'm American. Secondly, I'm an outsider and it's very insular culture. And I think the timing was wrong. It was 10 years ago now, and so things have changed dramatically. As I look at this, I'm just in awe of how Deloitte's a incumbent organization, that there's lots of people resisting it, but yet there is a pathway to success here, like the USI, the United States India project, where it was kind of this top-down pressure plus bottom-up culture that Balaji's done such an amazing job to build, is really the alchemy for success, right? It's like you gotta have the case studies and the proven work from the bottom up, and the right personality of the person leading that's empathetic, that has political cachet inside the organization. Yet you've also got to capture the imagination of the leaders that this is an existential threat and that needs to be driven. And my sense is that really what Balaji's stuff is really a pathway for a lot of us who've been in this business for a long time to see that this is a way forward, right? That we've been kind of in this cycle of non-success for a while, whether it was Havas or other things we've seen, and really it's been an alchemy of timing. It's been an alchemy of where culture is. Still, for me, it's the jury's still out on what the long-term effects are going to be from COVID, but certainly one of the conditions I think we all faced is like, I don't trust anybody that remote works. If they're not on my team and they're not in a seat that I can see them, it's not good. So that certainly has been knocked down. But my sense is it's that duality that seems to be the right alchemy. And Mike, I don't know if your impressions of that. One of the things when I was doing this morning, I really reflected a lot on your work, and the one thing I really enjoyed about the work we did with Havas was that I thought it was about incentives, that David and I got incentivization wrong. It was obviously an existential threat to identity. So I missed the whole point, right? The bigger issue there. And then I think that the work that you've done for so long around ambidexterity, explore and exploit, is so like, this is it, right? This is where this alchemy of balance between senior leaders, not just making those decisions on allocations to explore and exploit, but also having the cultural momentum from the bottom up to allow those things to happen, right?
Yep. Let me as we sort of finish off, John's use of the word alchemy. I mean, partly as leaders, you've got to be at the right place at the right time with the right stuff. There's partly the alchemy magic about that. But there's also systematic research that comes out of business schools. And to me, it's the combination of intuition, magic, alchemy along with the research. And as John has just mentioned, this notion of structural ambidexterity, of splitting things apart. And by the way, that GE Digital is a perfect example of that. High differentiation, targeted integration with the stuff to leverage, and really strong senior team support. I want to sort of marry that research on innovation streams, senior teams, ambidexterity and change with this alchemy. And that's personal learning. Personal, you know, John Winsor is a different person now because of his experience at us. Jeff Davis, different of his experience at NASA. We're all learning. This whole notion of personal learning linked to organizational learning is what this Balaji case is all about. And the beauty of this B case Balaji will be, hopefully we'll take it on and look how you personally and Matt and the firm learn now that you've made this expert fee investment. So I got to go, everybody. Really great to work with you all.
Hey, Mike, thanks a lot for being here. And we think we all really enjoyed it. The two things I'm going to deliver to you, Mike, because I think you'll be interested, is I will make sure that you get the list of the chat, because there was a lot of really great feedback. So make sure that happens. I will also get you a list of everybody that showed up on the call today and their titles, so you have a context of who you were talking about. And this group is really the experts in the world on this movement. So I would encourage you, I'll make sure that you get their emails too. So anybody you want to reach out with to get a point of view that maybe didn't have a chance to speak, you know, we're all in this together and trying to figure this out, but really, really appreciate your long-term leadership in this area of ambidexterity and change for organizations. I think it's going to take a lot more effort to help organizations transform themselves, and really appreciate that you've been on the tip of the spear for so long doing so much great work. So thank you so much. It was an honor to have you.
Before you hang up, before everyone hangs up, Professor Tushman, I just put in the chat a little link to Overtime. If anybody wants to continue this conversation on our own, I invite everyone here to come join us. Copy that link, and as soon as they end the live session, we'll start up another Zoom conversation. And everyone's invited.
Awesome. Okay, thanks, guys.
Thank you.
Appreciate it. Take care.